Hello everyone, welcome back to another video. My name is Adam and today we're going to take a look at an update on the oil tanker market, okay? And we're going to be taking a nice look at some images from Clarkson's Plateau. This is a shipbroking service and it talks about the weekly tanker rates. And I can tell you just from the NAT and other stock prices that this week the rates were depressed, and I mean even over the past month, stocks like NAT have definitely taken a beating, even flirting with the $3 price point for NAT, when usually this was a share that was around like $4 a share even like a month and a half ago. Okay, so a lot of people are wondering what is going on, whether or not to hold on their shares. And so I'm going to give again my opinion and what I'm doing with my shares, okay? But before we get into it, I just want to cover some quick news from the week. Well, first off, we can see that instead of now FANG stocks, so Facebook, Apple, Amazon, Netflix, and Google, it's actually going to be TANG stocks. So this is the meme of the week because Tesla actually surpassed Facebook in market cap. And here you can pause, and Cameron Winklevoss, who actually sued Facebook, is now saying that he's a Bitcoin billionaire, and he's tweeted that Bitcoin's market cap had also passed that of Facebook's. Makes sense that a money network would be more valuable than a social network, okay? That being said, though, Tesla right now is $880. We can see over the past 6 months a tremendous gain of about like 210%. I decided to sell my Facebook shares for a profit of over 100%. I was very satisfied with that. As you can see, I could still have made more profit since it was 816 US dollars. However, I think this is definitely bubble territory, okay? And I will wait until this Tesla drops back down. Hopefully, it will drop back down after people start taking profits and come back in again, okay? But today, in stark contrast to something like a Tesla, we're talking about oil tankers, okay? So let's look at this beautiful presentation by Clarkson's Plateau, specifically by Jorn Backlund. I'm not sure if I pronounced that correctly, okay? So as we can see here, tanker market earnings were not looking too promising, especially not for Suezmax carriers. And last week it was 5,000 per day per ship, whereas this week, if the ships were on a voyage, it was only $2,600. Okay, even VLCC carriers, which carry double the amount of oil as a Suezmax, were also down to 13,300 as compared to 16,200. Aframax was the only one that was actually up this week, which carries half as much as a Suezmax. Okay, as we can see, the picture is not looking very good at all. Okay, this blue line, dark blue, represents 2020 levels, and actually they all represent 2020 levels, and as we can see, these results are incredibly depressed compared to 2018 and 2019 levels. They used to overlay 2018 and 2019 levels onto this diagram, but maybe it was just too sad to actually depict in the same diagram, okay? But these levels are like the lowest they've been in a really long time, okay? So that's really not good to see. Again, I'm still optimistic, and I'll show you exactly why, okay? And clean carriers, we see sort of the same picture, okay, at their lowest levels year over year. All right, and we're going to be taking a look at this article, crude oil tanker market in for long, painful recovery. Okay, and what they're saying is the outlook for global crude oil tanker market remains difficult for the near term, according to a new analyst um, from consultancy Jury. In a year-end analysis, they point to uncertain demand for oil combined with overcapacity and the industry's failure to take steps to address the glut of vessels, so an oversupply of vessels. And as you know, tanker markets, they mainly operate under the supply and demand. So if there's an oversupply of vessels, that tends to reduce the spot rates and reduce earnings for tankers. Okay, so in their analysis, they point to continued lack of demolitions and efforts by ship owners to reduce the overcapacity among crude oil tankers. Okay, um, and if we go back to this chart, if we fast forward, we can see actually that tanker deliveries, they were still, relatively high, not as high as some of the previous years. As we can see, they're definitely higher than like 2014 levels, but they're still, they were still quite elevated. Okay, so let's see what they're saying here. So, sharp decline in vessel earnings in the second half of 2020. Jury points out that only one VLCC has been scrapped since the beginning of 2019. At the same time, 104 new VLCC carriers have entered the market. Okay, so what they're saying is one, that there's a lack of demolition, so not many ships are being brought to the scrapyards, combined with an oversupply of VLCCs. Okay, so here they're saying that this increase in tanker deliveries resulted in oversupply. And finally, we can see it's actually starting to settle down. So maybe, it'll take some time for this effect to kick in, but hopefully now not many more tankers are being delivered into the market because it's so unprofitable. And we can see tankers sold for recycling or for scrapping was actually quite depressed in the beginning stages of the year, okay, as we can see here in the bottom right of the graph, okay. And finally, we can see a bit more of tankers are being sold for scrapping, all right. So that is good news for the oil tanker market. We just need to see, let's say discrepancy in the price of oil, so that will lead to more increase in transportation of oil to sort of make up for the account of difference in prices between one country and another, okay? That's what oil tankers do. All right, and now we can actually see some even the most disturbing images is potentially even more ordering of new tankers right here in early phases of 2021 and late 2020, possibly trying to account for an increase in the amount of demand for oil and oil transportation by some oil tanker firms, okay? So NAT, they published some statements, and I mean, I would take these shareholder statements with a grain of salt. But last week, Herjborg Hansen, the CEO, said that he commented on the strong economic development in Asia, and this is a contrast to the uncertainties elsewhere in the world. Okay, regional imbalances in demand combined with a decreasing price of oil that we now see stimulate transportation of oil that our Suezmax tankers carry. This is all good for our tankers. Okay, it's kind of written like in the sixth grade level. I mean, maybe he's not. English is probably not his native language, but still, I don't know how much I would believe in this. Even like short term, I don't think the oil tanker market is going to be very profitable. But again, long term, especially with scrapping rates going up, I still think that there might be a recovery coming in near the end of 2021. But again, that's all very, very highly variable and very dependent. Right now, I'm sitting at about like a 40% loss on NAT stock, but I will continue to hold for the dividends. Okay, um, it'd probably be like a 2% dividend at this point if they get out like 2 cents per share. Okay, but we can see NAT here. It was about like $3.50 at the start of December and early December, and I mean since then it's down by about 5%. This is actually in contrast to Frontline stock, which was up by close to 2% on the month, and even Euronav stock, which was up by about 5% or 7% on the month. Okay, so relatively good news for Euronav and Frontline, but not for NAT, even though these markets tend to um, coincide together. They tend to move in the same direction together, okay? So we'll have to see with upcoming earnings report for Q4 coming in the next month or so. I'll be taking a look at that and seeing where the tanker market is for the longer term. I think for the medium to short term, I don't see NAT doing much better and all the Frontline or Euronav. I mean, I think they're already doing quite okay right now. I think there is a slight uptick in, I mean, oil. We can see oil's actually, the oil price is going up, so that's good news. And that tends to bode well for oil tanker carriers, although they don't, correlate 100%. They do tend to correlate in the same direction. So as oil goes up, oil tankers also tend to go up, okay? But that's not necessarily the case all the time, all right? So again, I'm going to be holding all my shares, at least for the dividends for the next year or two, while also participating in more electric vehicle plays as a hedge, like Tesla. Although I sold Tesla, I do think that it will come back down to earth, and I might have an opportunity to buy back in again, okay, and be the future of green energy. That's all I have for you today. I hope you enjoyed. Be sure to hit the thumbs up button and subscribe if you haven't already. Also, I have a cup embodied with my YouTube logo, so cheers to that. Got it for a little Christmas present. Let me know if you would like merch like this, and check out some links down below in the description. So yeah, cheers guys, and have a fantastic day.